Hi, I'm Jason, broker owner of Starr Realty, and today I have a special guest, Jennifer McCall of Total Mortgage, and she's going to talk today about jumbo loans. Hi, Jen, how are you?
Hi, I'm great. How are you? Thanks for inviting me.
Well, I appreciate your time and your efforts today. Let's get right to it. What is a jumbo loan?
A jumbo loan, in a simplistic definition of it, is any loan that exceeds the conforming loan limit in any given year. So it's all about the dollar amount of the loan, not the price of the home, but the actual loan itself. And so each year, Freddie Mac and Fannie Mae, the government sponsored entities who purchase most of our traditional type of loans here, they set this conforming loan limit based on average home prices from the year prior. And so currently in 2025, the conforming loan limit is 800,000, excuse me, $806,500. So 806,500 is the current conforming loan limit. So a jumbo loan, by definition, would be any loan that exceeds that by $1. So 806,501, and you're a jumbo.
That's great. What would be the qualifications of a buyer for that, other than meeting that dollar figure?
So we talked briefly, Freddie Mac and Fannie Mae, they purchase the majority of our conventional conforming loans in the US, and their guidelines for qualification are pretty standardized. They are standardized. And so for the most part, everyone who has that type of mortgage, they're following the same qualification guidelines as everyone else who has that same type of mortgage. So with jumbos, because they're not being sold to Freddie Mac and Fannie Mae, they do not have to comply with that, specific list of qualifications. So it would be up to each individual lender or investor who is ultimately purchasing that type of loan to determine qualifying. And often they do sort of mirror the Freddie Mac and Fannie Mae guidelines, but there can be some changes. And again, that can vary from lender to lender. So the amount that you need down can change. The credit score minimum requirement can change. Pretty much any aspect of qualifying can change and can vary. So it doesn't necessarily mean they're harder to obtain or harder to qualify for. It just means we're not following that rule book that we have for the conforming loans.
Okay. What are the usual fees associated with a jumbo loan? Are they different than a conventional loan?
Not typically, not typically. Again, because they're not, because each individual lender or investor can sort of make the rules, if you will, on these. There can be some differences, but for the most part, the closing costs and the fees associated are by and large the same. The ones obviously that are dependent on the price of the home or the size of the loan, those will change accordingly, but there aren't inherently any additional fees or specific fees associated.
Do you want to talk briefly about the importance of shopping around when it comes to a jumbo loan? We've talked in the past, and you've mentioned how an eighth of a point can make a huge difference in a jumbo loan.
Yeah, so the more you're borrowing, the more the rate impacts that end result payment, obviously. And again, we're looking at a product that is specific to the individual lender or investor. So the rates can vary. Rates can vary anyway, but because this is sort of its own animal, if you will, we can see the rates and the rates and the terms vary between lender to lender. And as you said, the more you borrow, the more the payment is affected. So that eighth of a percentage point on $1 million loan is going to make a much bigger impact than, say, a $200,000 loan. So it can
Okay.
be more to your benefit to shop around for the best rate on
Okay.
jumbos.
My last question would be, do you have any thoughts on applying for a jumbo loan versus paying cash? Because a lot of high net individuals, choose to go the cash route, but do you have any thoughts on that?
Yeah, so me personally in my business, I do a lot of jumbo loans, and I'm seeing that over the last 2 years, maybe 2.5 years, I'm doing less of them, and I think that is because the rates have gone up. The rates are higher today than they were a couple of years back, and so people are opting to pull their cash out of investments to pay cash rather than borrow, where borrowing at 3% or 4% seems more attractive than borrowing at 6 or 7%. So I do think that not most, but more, I'll say, more people are tapping into those investments and pulling out cash rather than borrowing. So I think once we see interest rates go down, that'll change again. But for those folks who are doing that, there is something to keep in mind. You can recover that equity at some point in time. You can do a cash out refinance and recoup some of that investment down the road. And I think people will do that. Those that paid cash, I think, will come back and try to do a refinance, and whether that be for improvements or repairs or additions or just replenishing their savings. I think we will see that.
Fantastic. Listen, appreciate your time. Before we go, would you like to just give your contact information so the people who are watching can get in touch with you?
Sure. Thank you. Yeah. Again, it's Jen McCall. I work for Total Mortgage. I have an office in Laconia, New Hampshire, and I've been in lending for over 20 years. And you can reach me at jenthelender.com, and it's Jen with one N. That's my website. And you can email me if you'd like at jmccall@totalmortgage.com, and it's MCCALL.
Wonderful. Well, I'll tell everybody I've been using you for 20 years and we still talk to one another. So you must be doing something right. Thank you so much for being here today. And as I always end all my videos, thank you all for taking the time out of your day to watch this. Time is our most valuable asset. And thank you for spending some of yours with us today. Be well.